Good afternoon, everyone, and welcome to the ABA's economic webinar series on the Sustainable Finance Taxonomy. Before we start, I'd like to make an acknowledgement of country, and I would like to acknowledge that today I'm meeting with you on the traditional lands of the Gadigal people of the Eora Nation. I pay my respects to their elders, and I extend that respect to Aboriginal and Torres Strait Islander peoples here today. Today, I'm really looking forward to this discussion on the developments of the Australian Sustainable Finance Taxonomy. And with me today, I have two of the leaders of that work. I have Dr. Guy Debelle, who is an advisor to the Investment Committee of the Australian Retirement Trust, and he's also a non-executive director of TVAN. He's also co-chair, as I said, of the ASFI Taxonomy Technical Expert Group, which is developing the Sustainable Finance Taxonomy for the Australian economy. I also have Nicole Yazbek-Martin with us. Nicole is currently leading the development of the Australian Sustainable Finance Taxonomy and is working with government and regulators to develop the common definitions for sustainable economic activities and investments. Nicole also leads a body of work within ASFI with major finance sector entities to integrate nature considerations into financial capital allocation decisions. And just for full disclosure, I too am a member of the technical advisory expert group on the Sustainable Finance Taxonomy. However, today will be a conversation between Guy and Nicole, and I will help guide that discussion. And for those of you who don't know me, I'm Emma Penzo. I'm the Head of Economic Policy at the ABA, and we're really pleased you're here with us today. Now, even though we have a Q&A conversational structure webinar arranged for you today, we really do encourage your participation. And so if you can please locate the Q&A feature on your screens, you are more than welcome to ask any questions, and I will pick them up as we go through the conversation. To kick us off today, I want to turn first of all to you, Nicole. Let's go right back to basics, back to the very beginning, and let's expand on, define what is a sustainable finance taxonomy.
Great. Thanks, Emma, and thank you very much for inviting myself together with Guy here today. It's great to be able to speak at this webinar on the Sustainable Finance Taxonomy. It is, I often say, an unfortunate name because I think the moment people hear the word taxonomy, they often switch off, and it sounds a lot more complicated than it actually is. But to break it down, I guess a Sustainable Finance Taxonomy really is a framework to help identify and classify economic activities and assets that sustainably contribute to our climate mitigation objectives under Paris. They also help to identify key measures that you can make big capital investments in that will help transition activities towards that climate mitigation objectives. So really, I guess what it tries to do is create a common language system so that everybody can speak the same language when they are referring to climate-aligned activities. And really what this helps to do is create rigor and confidence in the market so that when lenders are starting to structure products that are driving these objectives, or when investors are seeking to make climate mitigation capital contributions or investments, that everybody's talking the same language, and then that really gives them confidence to be able to counter any sort of greenwashing claims that you say ASIC or others might be seeking to avoid. And really, I guess another way to look at it is a big shopping list for the future. So if you're a corporate and you're looking to make your big investments in activities and assets, or you're looking to align as a bank your portfolio of assets, here are key assets and activities that have been identified and defined that we know have got the attributes that are aligned to a net zero 2050 world. And so we can have confidence that these are the ones that you want to increasingly look to allocate new capital. I think just in closing with that, what it's certainly, when you look at what it is, it's also important to see what it is not. And I think it's really important to understand that a taxonomy definitely doesn't tell investors what they can or can't invest in. It definitely doesn't tell banks what they can and cannot fund. each institution will continue to have its own mandate, its own risk-adjusted return, its own expectations and commitments to the market. So a taxonomy really is an information tool. It's not a directive tool. And this is true under voluntary settings or regulated settings. It really just provides that information for the market so we can start talking around the same things.
Thank you for that context. But we know that there are multiple taxonomies around the world. And so I guess the next question is, well, why can't we just use one of those? Why can't Australia just adopt a leading taxonomy globally, such as that of the EU? Guy, do you have any thoughts on that?
Yeah, so in principle, what you say is right, Emma. We could have just adopted that of another region, but the European taxonomy doesn't really work in the Australian context. Not entirely clear it works in the European context either, but anyway, but it doesn't really work for Australia, and let me explain why that is. So as I said, the main taxonomy which has been out there for a while is the European one. It's actually legislated in Europe, and so all asset managers and banks have to, that is part of the regulatory system there now. But as I said, it's very Eurocentric. And just to give it an explicit example, so one thing which we're covering extensively in this first chunk of the taxonomy we put out a couple of months ago now is mining. Mining doesn't appear in the European taxonomy. They just assume, the steel just turns up in Europe and they don't really think about where it came from. So the concept of, what does green mining look like, or what minerals are needed in the transition just isn't thought about in the European taxonomy at all. But as you all know, that's a decently large chunk of your corporate lending books in Australia. So that just isn't in the European taxonomy. Another example which we're dealing with in the first part of the taxonomy we're putting out now is the built environment. Europeans build houses by and large to stay warm in winter. Australians build houses to stay cool in summer. And so the way the Europeans talk about housing doesn't really make so much sense for Australia, where we've got quite different considerations. So they're just two explicit examples. That said, what we were very explicit in thinking about when we set out on this work is we are not reinventing the wheel. So we want our taxonomy, the Australian taxonomy, to be very much as possible interoperable with the European taxonomy and with other taxonomies. So that is something we've had right at the forefront of our thinking in doing this. So a fair chunk of what we've got in our taxonomy is very much what is in the European taxonomy, but it's Australianized where it needs to be Australianized, but we haven't gone out of our way to do something different. So the idea is that if you're a bank and you're lending across many jurisdictions, you shouldn't find anything in our taxonomy that is particularly inconsistent with that in the European taxonomy. It complements it rather than is a substitute for it. So that's the main reason why we felt there was a need for an Australian taxonomy. Otherwise, we'd be completely beholden to a European one in particular, which doesn't really work for Australia. So, and just to finish though, on the mining side of things, for example, we're the first taxonomy to flesh out what sustainable mining looks like. But having done that, it's highly likely that other taxonomies around the world will adopt what we're coming up with on the mining side of things, including potentially the Europeans. So it isn't going to be a situation where there's a whole bunch of inconsistent regulation, which I know is always a bugbear of our friends at the ABA, but it is actually going to be as consistent as possible, but we're only diverging where it's absolutely necessary because it just doesn't work for Australia.
So my next question was going to be, why does Australia need its own sustainable finance taxonomy? And you've covered that really well, but you also mentioned the Australian taxonomy needs to be interoperable. Are you able to elaborate on the importance of interoperability? Like, who cares if the EU can interoperate with the Australian taxon. What does that mean for financial and capital flows, for example?
Well, you care, because as I said, it's always a bugbear of every financial institution I've ever interacted with in the past. Their biggest complaint is that regulators have inconsistent regulations. So I mean, and that's actually to some extent at the heart of it, is that you don't want to have one system which is covering your European books, another system which is covering your Australian lending books, another one which is covering your Asian lending books. So we're very much aiming to have something which is pretty much consistent across all. There might be, so the differences are much, much less than the similarities, let me put it that way. And the differences are only there where it's sort of necessary, or in our case, in the mining case, where it's additive to what's in the European taxonomy. It's certainly not in contradiction. So it's very much that it's a global financial system, very well aware of that. And so you really want as common a standard driving capital flows across the globe, so that you can compare a green investment here with a green investment in Europe and know that you're looking at basically the same criteria in making that assessment.
Thanks, Guy. And thanks for spelling it out so clearly as well. Nicole, ASFI is the engine or the mechanism through which the taxonomy is being developed. So under the auspices of a government mandate or request, if you have it, can you tell me what the role is of ASFI in the taxonomy development there?
Sure. So I guess I'll go a little bit into the history, because it gives a good explanation of sort of why ASFI are leading this, working very much in partnership with the Australian government through Treasury on this work. Taxonomies have for a very long time been seen as a crucial piece of sort of foundational information, because and then other bits of sustainable finance policy architecture get built on top of those. And so when ASFI as an initiative, so the Australian Sustainable Finance Initiative, of which I'm sure many that are on the call here today also participated in, was really an industry-led finance sector initiative to say, how does Australia grapple with this massive transition that is ahead of us? Is our financial services system fit for purpose? What additional information and other regulatory architectural support is needed around that to ensure that we really take advantage of this, these couple of decades, that we all and we allocate capital in the most efficient way possible to get to our sustainability goals. So that was a process that happened and was really driven by industry under the banner of the Australian Sustainable Finance Initiative. And at the end of that initiative, they came up with a suite of actions or recommendations of things that we needed to put in place in Australia to ensure that we had the best chance to be able to allocate capital efficiently and really capture those opportunities. ASFI, out of that process, was formed as an institute to help to drive those recommendations and actions. And one of those key actions or recommendations was the development of Australian Sustainable Finance Taxonomy. So when we were formed as an institute, the founding members said, this is first cabs off the rank. We need to get started here. And at the time, the Australian government wasn't quite ready to make that commitment around really looking at what sustainable finance means in the regulatory sense. And so we started an industry-led process, very inclusive process, to say, what would a taxonomy look like? What are the recommendations? What can we learn from Europe and other jurisdictions? And that culminated in I guess a recommendations paper that said, if we were to take this forward, this is how we would do it. Obviously, in the interim, as that process was happening, the Albanese government came into power in 2022, and Dr. Jim Chalmers, our treasurer, really signaled that this was a key plank. They see private capital and the allocation of private capital towards our climate commitments as a very important element of getting us to net zero, and see sustainable finance as a crucial part of that. And so, really looking at the momentum behind industry, saying we're not going to work against industry. We really want to work with industry on this. And so, through ASFI, in partnership with ASFI, to say, you, ASFI, take on this role of almost like a custodianship. I like to call us the secretariat. So we are not the decision makers. ASFI are not the decision makers in this process, but we are responsible to government to actually drive the initial development phase. So this initial development phase is for 6 sectors across the Australian economy for climate mitigation, creating a taxonomy for climate mitigation. We set up the governance structures. So as Emma mentioned, it's an independent technical expert group that has been set up to actually lead, and there are decision makers of that. Emma's on that group, and Guy is a co-chair on that group. That was part of an open expression of interest process, and all of those members were actually endorsed by the Council of Financial Regulators Climate Working Group. So that's APRA, ASIC, the RBA, and Treasury. So they sit as an oversight body. They see the TTEG as that industry-led technical expert group that are the ultimate decision makers. And ASFI really is, I guess, the secretariat that helps drive this process. We work with our consortium of technical experts. We work with other advisory groups, take all of that technical information and bring that to the TTEG to be the ultimate decision makers. And then, of course, everything that we do also goes out for public consultation. So really, I see this whole process and the work that ASFI does is really just that facilitating the development of a taxonomy that is industry-led, that is industry-informed, that ultimately will go with the endorsement of government as a key benchmark that we can start to take forward, even if initially on a voluntary basis. Oh, you're on mute, Emma. Sorry.
Of course I am. Maybe if we can just drill just a little bit more on that process for how some of those, the 6 sectors are, the taxonomy classifications for those 6 sectors are developed. And maybe if you could maybe just pick one and talk about what the expertise are on those specific working groups.
Yeah, so we'll use the built environment because it's a nice one. I know that's something that is of strong interest to many people on this call today. So what we have, obviously, we have our technical expert, which is 25 leaders across the financial services sector, in banking, in investment, asset owners and asset managers, in climate science and environment, and in policy making. But sitting underneath that, we have advisory groups for each sector. So for the built environment, we have an advisory group. It's made up of the leading industry bodies in the built environment. So the Green Building Council, Neighbours, we have actually have the Australian government on that advisory group representing the NATAS system. We have Infrastructure Australia on there, and then we have key experts from industry. I can't remember some of the key groups that we've got. I think Fraser's is on there, Stockland's is on there. Really a good group of around 14 people that we work with on an ongoing basis. So like I said, we have our technical partners that's led by the Climate Bonds Initiative. They are technical experts. They create the criteria, which is very much centered on, global technical criteria. And then we take that and we contextualize it in the Australian context, and we workshop that with our technical advisory groups. Once we have something that's quite firmed up, we then go to our technical expert group, actually committees, subcommittees of that group, and they workshop that, and then we take that back to our advisory group. And it's an ongoing process over the space of a few months to get to the point where we have criteria that then gets endorsed for public consultation.
Thank you, Nicole. It's actually quite a thorough and robust process that ASFI is running. So, Guy, we're going to have 6 sectors. We're going to have a taxonomy that identifies, what is sustainable or what is not within each of those 6 sectors. How will the CFR or government utilise the taxonomy?
Yeah, I mean, I think that's still an evolving process, but it's one thing, as Nicole said, it's a foundational element of a lot of the government's sustainable finance agenda. So it serves that purpose by being this consistent reference point across pretty much all of the financial sector's activities. So I think that's sort of where it starts. But then, as you know, Emma, that's something we're working on at the moment, is actually making some recommendations to the CFR as to how they might actually use it. They've actually asked us for that. But how might they use it? So one I mean, one purpose I think it serves, and if I was still on the CFR, this is how I'd use it, is that it's actually a consistent way to assess, you know, the way that banks and asset managers are classifying their investments. So it provides a consistent reference point for the whole financial sector. And actually, one of the things which Nicole didn't mention, but one of the key purposes I see of the work that ASFI is doing is it's actually a public good for the financial sector as a whole. And that was, you know, part of Nicole's potted history. The reason why this ASFI existed to start it off was because the previous managed to convince the previous Prime Minister and Treasurer that a taxonomy was probably a necessary thing, otherwise we're going to be in trouble. But they said, oh, well, as long as it's industry and it led, then we'll be happy to endorse it ex post. But we needed to have something which is consistent for the whole sector to use. And rather than each financial institution in the country coming up with their own taxonomy, which would be a waste of your resources and time and effort, good for the consulting industry, not so good for you guys, it's much better to do it with a combined effort across the whole financial sector to come up with a consistent product. So it's providing that, you know, it is actually a public good, I think. So that's one use for it. But then the financial regulators, so ASIC can use it as a common way of assessing how people are classifying what are green products and what aren't. You can also use it to assess the super funds, which are, you know, in terms of the way they're classifying their assets as to what are green and what aren't, and including in the various products that they offer which reference that. So it very much serves as a common and consistent reference point. The other thing I think it does serve, and whether the government, there's more the government than the CFR, takes it this way, is we've actually done a fair bit of work as to what, as Nicole said, this is about attracting capital into what will, provide the foundations for a 2050 aligned economy. So the government, as you may be aware, is doing a lot of work on sectoral pathways. To some extent, I think we've done a fair bit of the grunt work for that. How much of that, and Nicole's team has certainly been interacting very closely with that. So, I think we've actually done a fair amount of investment into what does an Australian economy which is 2050 aligned actually look like, and where is it that we need to be directing funding to achieve those goals. So, as I said, it very much serves as a public good, which is useful for the whole financial sector, but also then useful for the regulators in terms of being able to assess, using a common metric, the claims that various financial institutions are making about what their lending books or their asset books actually look like.
Guy, I'm glad you raised the work that the government's doing on the sectoral pathways. Could I trouble you to maybe just elaborate a bit more about the foundational work that ASFI, that the TTEG and ASFI are leading, and the way in which that might be useful to government, how that might be interfacing?
I might pass. Nicole can probably answer that one better. Okay. She's the one actually having that conversation all the time with them. But I mean, I think we're actually doing hopefully doing a fair chunk of their work for them. And so they're not also reinventing the wheel, but I think we've certainly got a lot of useful input. But I'll hand over to Nicole how that input has been fed into that sectoral pathway process.
Yeah, no, thanks. And it's a great question, Emma. And a lot of people have been asking this question. And I guess the way we're kind of looking at it is the foundation for both taxonomy and the sectoral plans is hopefully in the first instance, some robust scientific scenarios that run under different options, temperature options, that get you to the goal that we want. And we very much understand that is what the government is doing itself. So they are working with CSIRO on a couple of different models. We won't get nerded out on exactly what those are, but there's the GTEM and there's the OzTimes model that run different scenarios for Australia and saying, okay, what does it look like? What does that mean at a whole of economy level? And then what does that look like at a sectoral level? So that is really the basis on which we are developing individual criteria for the taxonomy, but that is also the starting point for the sectoral plans. Then what the government sort of does is a bottom-up approach to say, okay, if this is a likely scenario, what are the key policy levers and things that we need to put in place to help to drive those outcomes that are needed if we're going to reach those scenarios. Equally, the Australian taxonomy is busy defining individual activities, assets, and identifying key measures that can help at a granular level, those bits of the economy, saying this is what it needs to look like. And this is the measures you need to invest in order to make it look like that. So ostensibly, the two should fit very nicely as a hand in glove to be, and hopefully the incentive structures and the schemes, and there'll be some regulation, some incentives, a whole lot of things, and the government's announced quite a few of them, like the Future Made in Australia, the hydrogen incentive scheme, all of those things. Those are the same activities and that we are going to be identifying in the taxonomy. And so really it's about private capital and public regulation pushing in the same direction. And the more that they are aligned, the more hopefully we can see that pathway for private capital with that incentivization from the government, and we'll get more investment into those activities. So it is very hand in glove, and certainly what we have been doing the entire time is giving the different parts of government open visibility to the list of activities that we'll be defining, making sure that we are defining the activities that are of interest to them that will likely come out in the sectoral plans, so that so that the two are really talking to each other, and that private investment is aligned with the public incentives that we're going to start to see coming down the pipeline.
So on that basis then, will the taxonomy be mandated, do you think, given its close linkages with other developments such as the sectoral pathways?
Yeah, so I mean, I think ultimately that is a decision for government, and I know that they have signalled in the recent release of their Sustainable Finance Roadmap, they've tried to give industry and everyone a clear sense of what the sequencing of all of these things are going to be, and they've certainly said, at least in the first instance, it's going to be voluntary. So let's work from that basis. When we talk about mandating versus voluntary, I think it's important for people to kind of understand what that means, because a lot of people think mandated means regulated, means I'm going to have to be aligned to the taxonomy. So I want to be clear that even under the most, let's say egregious, let's make it a nice word, under the most stringent regulatory regime, which is currently the European regime, there is no mandate for capital allocation. The mandate is just that you need to use it as a KPI in your reporting, right? So that is the most extreme form. If we are looking initially in a voluntary sense, I think it actually makes sense for Australian corporates and Australian financial institutions to start to think about, is that something that actually we can also start to use it for. So in the EU, what they do at the moment is under the European Sustainability Reporting Directives, or the ESRS, which is the equivalent of the ISSB standards, which we know will be soon mandated in Australia. The European taxonomy is a KPI for both the opportunity disclosures under their climate reporting and as a capital allocation disclosure under their transition planning. To the extent, even under the voluntary sense, that Australia started to pick it up and use it like that, what you are doing is creating a similar metrics so that European investors that are interested in Australia, and Australia that is wanting to talk with global investors, we're actually still using the same metric, even though it's not it's not whether it's a European taxonomy or Australian taxonomy. It's the fact that you're using taxonomy framework to help you to identify your opportunities under your climate disclosures, or help you with your KPIs under your capital allocation under your transition planning. And I think when we're talking about that interoperability and alignment and getting to that point of hopefully one day equivalence, I think that would be a very helpful way to start to use a taxonomy in the voluntary sense. I think one of the things that potentially is an option is that if the Australian government, given that they have funded and have really indicated that the sustainable finance taxonomy is an important piece of that architecture, is to say this is a voluntary benchmark that you can start to use for these different types of purposes. That could create some level of certainty in the market that this is something that at least they know. It's a guidance, like Guy said, it's a public good that's out there. They could use it. You don't have to use it. You could use something else if you wanted to, but this is something that we know that the government feels comfortable with. And then, of course, there are ways in which green bonds, green bond framework, green bond standards, initially even under the sovereign sense and not necessarily corporate green bonds. That's certainly something that the AOFM and state treasuries have indicated they're very interested in using in the first instance.
So let's jump into the use of the taxonomy, and we'll get into government as well with the green bond issuances. And in the first instance, I might go to a sector that's close to most people on this call today, and that's residential lending. Broadly, how would the taxonomy be useful in residential lending decision making and or reporting, Nicole?
Yeah. So I mean, I think everybody's sort of looking at this green mortgages, green lending activities, especially with the government's, $1 billion electrification fund that's coming down the pipeline now. This is really an opportunity ripe for the picking. This is something that both has a consumer-facing end to it, and I think will be good for the general public, but also something that I'm sure many of your members are really close and engaged in. This was something that we saw as if it's the one thing we get right, we want to ensure that we have a set of criteria that can really underpin green mortgage lending and green loans to the residential sector in the first instance. So we're working very, very closely with the Australian government, who has got the NATAS whole of home certificate, looking to make sure that the taxonomy criteria will be able to be, the information or the data that's needed for that will be able to be drawn from the certificate, looking at what the needs are for both the banking sector in the first instance, and ensuring that everything is captured so that we could actually come up and have a framework in place that can really help guide a suite of lending products in the residential sector, hopefully by the time that the taxonomy is developed, and that will have proxies that can be used from a data point of view to be able to demonstrate alignment with that, so that the information that the banks need in order to help shape up those products are on the whole of home certificate.
And just make a note there to members, for those of you just today, the ABA sent an email to a relevant working group that the government is undertaking several workshops on the READY initiative and the whole of home NATAS rating system. If you haven't received one of those emails from the ABA, and you'd like to be part of that, can you please contact me, and I'll make sure that you get those details so that you can attend and get upskilled in that area. Before we leave residential green lending, though, I mean, this will have, I think, Nicole and maybe Guy, this will have significant consequences for issuance of green RMBS, right? If you're issuing mortgages that are aligned to the taxonomy that utilizes the data from the NATAS, there's a good chance that your green RMBS, if you issue it globally, locally, that it will withstand any criticism or the like.
Yeah, I mean, Nicole went through the criteria there, but yeah, and again, it's because it's a consistent way. If I'm a global investor and we sell a decent chunk of our RMBS offshore, if I'm a global investor, I can be confident that the fact that you're calling this a green RMBS is aligned with other green RMBS I'm buying in Europe or in the UK or in the US, well, for that matter. And I don't have to do sort of that extra level of due diligence because it's effectively it's a green stamp on the green RMBS using a framework which I know and I understand. And so that should and that's again partly comes to the interoperability point of view. The fact a European investor can take comfort in the fact that it's a green RMBS issued under the Australian taxonomy framework, and so that's actually should be helpful for the green RMBS market in having a consistent way of doing this. So you don't, to some extent, although I'm sure the rating agencies will find a way in here, but you wouldn't have to necessarily go and get it. They'd have to validate that it's consistent with these criteria, but they won't have to come up with their own criteria. They should just be using the taxonomy as the reference point consistently across all the securities.
Yep, thank you. So leaving residential lending behind then and going into commercial lending, Nicole, how do you see the application of taxonomy for commercial lending?
Yeah, so I think similarly to in the resi lending, I mean, obviously commercial lending to the extent that we have the built environment, commercial lending to the built environment, I think that there's, again, working very strongly with existing systems. And I think, so working with the green building, green star rating, working with neighbours to be able to really come up with a robust set of criteria aligned together with proxies to get that market running and using that criteria on a great basis. For other types of commercial lending, I think corporate loans and products is going to be the first port of call. I do note, though, that there has been quite a significant shift away from sort of specific purpose lending to general purpose lending. And so that is slightly more tricky with regards to the taxonomy, because the taxonomy does, define assets and activities and measures, which lend themselves very, very well to corporate debt and to products, but less so to general purpose finance. It's not to say that you won't use the taxonomy as part of your general purpose finance, particularly if you're working with entities that are actually starting to think about, so getting back to my previous point about using the taxonomy as an indicator in your transition planning, in your sort of corporate climate disclosures reporting metrics. Then you as a bank can have a conversation with somebody, or be looking with your corporate clients to be able to say, these are maybe some things that you can put in place in order to enable that general purpose corporate lending that has, a green tinge to it, or a green kind of label to it. But it does, in the first instance, I think, will be very much geared more towards corporate loans, corporate debt, and corporate products.
Yeah, I mean, the one thing I would add, though, that we're about to tackle this sector now, one which is another important sector for the Australian banking system, which is agriculture. And so we will be coming up with green criteria for agriculture, which is a decently large chunk of Australian banking books. So that will be probably more aligned on the farm activity level side of things, and so that, I think, is something which should also be useful, particularly for banks.
Yeah, no, for sure. And then, of course, obviously, as you're looking at more your institutional type lending with large corporates, your SLLs, I think it'll be extremely helpful for the sustainability loan market, which I know has had its few ups and downs, but really for banks to be able to have the confidence to be able to structure these SLLs, looking at the taxonomy and ways to use the taxonomy. I think there's a lot of ways that you can use the taxonomy to structure your KPIs under your SLLs that banks could have a lot more confidence that they will withstand any regulatory scrutiny going forward.
So shuffling across to some related industries now, I'm keen to explore how asset managers and superannuation trustees funds would make use of the taxonomy. And interestingly, in today's AFR, the front page AFR was all about the importance of private finance in empowering Australia, and the fact that banks and private finance can work together. So, Guy, what are your views on, and we've also seen some super funds get in trouble recently for making great claims and the like. So, what do you see as the biggest uptick of the taxonomy for asset management and superannuation?
Yeah, I mean, so one thing, like we see this work at ART, is that we have to classify what our asset portfolio looks like in terms of what chunk is green. So both to report generally, I mean, that's actually part of the obligations under the financial reporting obligations coming down the pipe. So to be able to do that, but also in terms of particular, sustainable products we have as part of the choice menu. But we need, and so we're actually looking at, okay, what chunk of our portfolio can we classify as green, and then using the taxonomy as the reference point of that. And then and probably at least as importantly also, I think, is what part of our portfolio can we classify as funding transition as well. And and so that is, again, as I said earlier, it's the common reference point that if you're looking at art or you're looking at Aussie or Aware, that you can be confident as a superannuant in those funds that they're making these claims using the same reference point. And so that's something I don't have to worry about. But as you say, also it to some extent gets to the greenwashing space by saying, okay, this is actually the benchmark for green. So if you want to call a product you're offering green, then these are the criteria that it needs to be consistent with. So as I said, this is very much taxonomy in the sort of dictionary sense. It's like, how do you classify a whole portfolio? What does it look like in terms of green or transition?
And what are your thoughts about the insurance sector and how they might make use of the taxonomy? Is it mainly going to be limited to their investment activities, do you think, or will they make broader use of it?
I think probably primarily on the investment side. I mean, I think the writing of insurance is probably a slightly different space, and in terms of activity, but I suppose you could also use it to, how many products am I writing, am I assuring which are absolutely green versus, I could also use it in the negative senses. Maybe I don't want to be insuring some of these activities which are not sustainable. That's the other way I could flip it around. Although I think the insurance industry is sort of already there, but so I think you could use it in both senses. But yeah, absolutely on the asset side, because in the end, they're also large asset managers as well as writers of insurance products. So.
Thank you. Members, I don't see any questions in the Q&A. I'm not sure if they've been published into the Q&A, but I'll have a look while we're chatting. I want to move on to information and the data perspective and what is going to be needed for banks in this instance to make it usable. And Nicole, I'll turn to you for this. But and look, Guy mentioned about the taxonomy for the agri sector and the fact that it is going to be at farm level activity and measuring a farm level activity. And we know how much trouble the farmers have getting on-farm data. So what kind of data and information? So this isn't a question on agri, it's just an example. But what kind of data and information needs are we going to need? Like, are my banking colleagues going to need?
Yeah, look, it's a really great point. And you have picked a sector which is actually quite unique. So we'll go with that example for now, and then I might use the other, maybe another example as well. So for the agriculture sector, because it is just so dispersed in terms of the clientele, right? We're talking, I don't know what the number is, 60,000 plus. It's probably much more than that in terms of individual farmers, all who, most of which who would fall way below thresholds, even if agricultural sector was part of the climate reporting cycle, they would probably fall way beneath that threshold to do those reporting. Are probably unlikely. Many of them, outside of the big institutional ones, many of them are never going to need to do their climate reporting. And so even from that base level data, it's a struggle, right? And I think we all recognize that. And I know that there's a lot of work being done at the moment around sort of what that looks like from a reporting point of view. So what we've looked at it for the agricultural sector in particular is a different, a slightly different approach than what we've taken for the taxonomy for other sectors, or what we were thinking about taking, is really knowing there's a lot of evidence, scientific evidence about what we know is good at a farm level. But when it's applied, obviously at the farm level, there's a whole lot of variables. So we don't want to get so prescriptive to say farmer X needs to do 1, 2, 3, because we don't know what farmer X is doing, and we certainly don't know his farm like we do, like he does. So we want to create a list of activities and measures that we know from the science do drive good outcomes, and without more, be able to offer those mainly as CapEx measures, or mainly so it will mainly be relevant to debt, but it will also, I guess, at portfolios of assets when you are managing large natural capital assets, so asset managers, etc., can really understand, but they have a lot better handle on sort of how they need to manage large agricultural assets. But I think for the taxonomy, how it will be used mainly for banks who mainly bank smaller scale farmers, we're saying, here are the things that you will be able to work with your farmer on as part of a sort of a loan product, where they can use that money for those purposes without more, right? Because what we don't want to do is create a massive burden, both for the finance sector and for the farmer, to be able to access capital for these measures. So that's probably the approach that we're going to be taking for agriculture. It's slightly less robust from a data point of view, but I think what we do know for certain is that there is a lot of scientific evidence out there, and we will be validating the activities and the measures that we identify in the initial taxonomy, as we know they drive good outcomes. And so without more, let's get cracking and start to see how we can partner with your farming clients to be able to invest in those. For other things, it is slightly different, and so there will be different types of data points. And what we're clearly thinking about at every step of the way is that, what does this mean from the activity seeking access to capital, which will be some kind of business or corporate, and what does it mean from a financier who's needing to get that data to validate and verify if they're offering or incentivizing this. And so we are looking at that data point in each and every case. So for the other example that I used is the built environment. That's why we're very, very keen to be working with our proxy service providers, because if we can seek alignment and get alignment between the taxonomy criteria and Green Star, for example, or neighbors, for example, then you know that if you're neighbor certified and you've got your certificate and you're a 5.8 or 5.9, and please don't quote me, that's not necessarily the star rating that is going to be aligned to the taxonomy, but it's more or less going to look something like that. And we think we can really get to that point. Then you get your neighbor certificate, and that is the evidence that the bank needs in order to say, I'm lending in accordance with the taxonomy. So that's the type of things that we're trying to ensure, that it's easy both for banks to really engage with this, but it's also easy for corporates to do it. And of course, balancing that usability with credibility is the fine line we're walking all the time. I would say one last example, for example, in the renewable energy sector, what we've done at least until 2030, and I think we're still looking at whether that we should extend that further or not, is that without proving anything, you're not having to look at life cycle emissions, any investments in certain renewable energy products will be automatically deemed green, because we know, all the evidence suggests that it's under that threshold in the taxonomy, and so you don't need to go and generate a whole lot of data to prove that. If you're funding new renewable energy investments, they will be green. So it's those type of things we're just really trying to make sure that data is available for banks to be able to engage with the taxonomy.
Thanks, Nicole. I've just been reading a couple of questions from members, but I might circle back to this one from Jody, and I have it in a different format here as well. So the taxonomy isn't a set and forget, right? So can you maybe elaborate on, once it's delivered to the government at the end of this year, that's not the end of the settings, or, this is green, this is transition, this is not green. And also a second question to that is perhaps just reiterate, who was going to be then responsible for doing this going forward, perhaps. Thank you.
Yeah, no, look, these are all the big questions, and it's really great that people are engaged in asking them. And I know Emma's laughing because I know we're all kind of engaged at the TTEC level on providing at least perspectives on what that could look like. So I think the government will go and consult on this. Firstly, to the question of the set and forget, all taxonomies are designed with a review and refine mechanism in mind. So the EU taxonomy, for example, they're actually going through that process at the moment. And so updated criteria for the EU taxonomy, I think, will be coming out at some point next year. And again, not to preempt, any TTEC decisions, but certainly there will be a review time that is recommended in the taxonomy framework. So is it every 3 years? Is it every 5 years? That, something that's still being kind of unpicked, but there will be an automatic updating mechanism, which will be built into that framework. Then the question becomes, who does that? And I think that goes to the broader question that the Australian government is grappling with at the moment around the broader institutional arrangement. So who is the ultimate home, or what is the ultimate home for the Australian Sustainable Finance Taxonomy, and how does that fit into the broader regulatory architecture? So climate disclosures, transition planning, product labeling. And I think that this is a very much alive engagement at the moment, and something the Australian government, I understand, will be going out to consult on at some point. So definitely it will have a home and it will have an update mechanism, but the details of that are still kind of being decided.
Let me just add a couple of things on the update. I mean, there's a couple of things worth thinking about there. One is the technology is changing in this space, clearly. And so that's one thing we need to take account of. So there are, the technologies in terms of what's green is very much evolving through time. And so we need to take account of that. But that cuts both ways. So the way we define transition in some cases is if there's no plausible green alternative. And in some cases, but in some cases over the next few years, there will be a plausible green alternative. And so we need to take account of that. So, so there's a number of reasons why we need to update. It's because the technology is going to change, and that sort of cuts both ways. But I think the other thing to make people aware of, though, it's not going to be a wholesale rewrite as well. So it's a framework which is going to be broadly consistent through time. We hope we landed pretty much close to where it needs to land. So it's not going to be something that's like, oh, now we've got a wholesale rewrite coming down the track. It should be an iterative update rather than a wholesale update.
Thanks, Guy, and thanks, Nicole. Michael's also got a question here, which you might like to address. And he's asking about the communication strategy on the why any assets and activities are not covered in the taxonomy, etc. So it's really about, well, how do I know it's being done right and the like.
Yeah, no, and it's a great question, Michael, and I know that this is something that Europe really grappled with, because we're not going to be able to cover everything in the first instance, just by sheer, resources, timing, mandate. And so there will be things that are not covered, and then there will be things that are ineligible. So what we will, and in some of the feedback that we got from the public consultation, is to be very clear in our communications about if something is currently deemed ineligible for the taxonomy. So it doesn't meet that threshold for transition and green, versus there are a suite of activities in the services sector, there's a whole lot of areas that we're not going to get to cover, and that is simply not covered. And so when people are reporting alignment, if they choose to report alignment with the taxonomy, that there is an appropriate weighting in place, and that there is a mechanism in place to make it so that it doesn't look like there's this distortionary outcome if you are engaged or invested in a particular sector or in a particular area that is simply not covered by the taxonomy. You don't want to be penalized or seen to not be transitioning to a green economy because those activities aren't covered. So it's a very live thing that we're looking at, and there is a lot of kind of work that came out of the UK and even on the EU to help to mitigate that messaging and ensure that we're very clear about what that means.
Maybe if we can just backtrack to the start there, Nicole and Guy. So Tom's asking about, is it really a Euro plus mining plus housing approach? And if it is going to be that, will we be cross-referencing Europe? Maybe outline some of the 6 key priority sectors, and maybe just talk through that interoperability discussion again. I think it'd be helpful.
I was just using that as an example, so actually, agriculture, right? Like, we do agriculture a bit different than we do in Europe. We don't have 1 cow per farm like they do in Switzerland. We have a few more than that, just to, be a little facetious. But, so it is, it needs to be interoperable so that everyone's not having to use a completely different framework in whatever jurisdiction they're lending into. But, local conditions do vary quite a lot. And so it needs to take it needs to take account of that. So, but and the other thing I would also say is, even if you described it the way your questioner just described it, so in Australia's case, adding mining, that's seriously consequential for the Australian economy, right? It's a very large chunk of our economic activity. It's a huge chunk of our export market. So a taxonomy that excludes mining is actually missing a very large chunk of activity in this country. Actually, also a fairly large chunk of emissions in this country, for that matter, too. So, but I think there was a strong motivation that we couldn't just adopt something from another country because it just missed a lot of the Australian economy, and where it did cover it, probably wasn't completely suited for it. So, I think there's an absolutely strong motivation for us to have our own, but in the same time, recognize that we're part of a global financial system, and so we can't go out somewhere on a limb. And also, again, from an efficiency point of view, if the Europeans did a fair job on a whole bunch of activities, which basically worked for Australia, then there's no point in starting that work from scratch again and just build on and instead use what they've already got.
Yeah. So just to add to that, so the 6 sectors that we are covering are the same 6 sectors in the Australian government's 6 decarbonisation sector plans. That's not a coincidence. It's planned not just because we wanted to be aligned, but because they do actually cover off on around 85 to 90% of Australia's emissions. So it is a significant part of our economy and some good coverage there. So outside of mining, agriculture is also not covered under the EU taxonomy. So it is very important that we will be the first major economy, including a major agricultural export economy, to be defining criteria for the agricultural sector, which, I believe from in the grapevine, the Europeans are very interested for us to have a look at as well, in addition to our mining criteria, but also our manufacturing criteria, which we're busy looking at the moment. What we're trying to do is create a bit of a modular approach so that if we're covering it off in the mining sector, we're also looking at the refining and the processing of that stuff along the chain, so that you're actually looking at key investment measures in transitioning that supply chain and key activities that we can start to define as green across that supply chain to invest in. And again, that is not covered under the EU taxonomy. So even though they do manufacturing, they focus on areas of the manufacturing sector. We're going to be looking at refining of key metals where we think, and the Australian government thinks, there's a competitive advantage for Australia going forward. So that's another sort of key area. So it is a bit of a we definitely, where we can plug and play, we will. There is some kind of generic criteria or general criteria that works across the board, across transport, for example. But then even within our transport sector, our starting point is going to be very different to Europe. So we'll need to adjust for that, even though the criteria might be quite similar.
That was an excellent question, Tom, and it just led me to a whole lot of other questions I wanted to ask and cover off, like the CBAM and the like, but we're going to run out. We've actually now run out of time for that. And I'm just going to move to close. I really want to extend a great thanks to you, Guy, and great thanks to you, Nicole, for taking the time out and really helping us dissect what the consequences of the sustainable finance taxonomy will be for the banking sector and beyond, and how that might impact our day-to-day jobs, from all the way from disclosure through to credit decisioning, all the way through to packaging up some of that lending into the financial market space for issuances in bonds and the like. So quite a significant development. Thank you to ASFI for taking the lead on this work, and so please pass on the banking sector's thanks to ASFI as well. And thank you to you, Guy, for giving your time, because it is, as you said, this is a gift to the nation, and so thank you for that time and in being here today. Members, if there's anything that you'd like to unpack further from today, please do get in touch with me, and I'm really happy to take you off into the right direction or to have a quick phone call with you as well. But I also just want to let you know that we also have a Future of Banking webinar series coming up, and the next one is on the 14th of August. That one is on data analytics, and it's about driving the evolution of banking from product to customer. So if you have an interest in that particular topic, you will be receiving an invitation through our mail outs, and if you don't receive it, please have a look out for the weekly newsletter. So those invitations will be issued very shortly. So bang on 3 o'clock. I don't want to keep you any later than what we've said. Thank you, everybody. Have a wonderful afternoon, and we'll see you next time on the Economic Series. Thanks. Bye.
Thank you.